I love that cryptocurrencies are getting more and more people interested in investing and finance in general. But some of the recent price action in more than a handful of the cryptocurrencies out there is really unprecedented. If you're considering cryptocurrencies or already are invested in them, it's worth considering if current prices constitute a bubble. Many well-respected investors, money managers, and traders who were doing this back in 1999 and 2000 are drawing a lot of similarities to how cryptocurrencies are moving right now to how dot-com stocks were moving back then. One of those investors who's gotten a lot of media attention recently is Michael Burry, who's one of the main characters in the popular movie The Big Short, who famously called the mortgage housing market crash back in 2008. And Michael Burry put out a slew of tweets in which he expressed a lot of concern over the current state of many cryptocurrencies and how they've been trading recently. He says that they are certainly in bubble territory and that their current levels are just not sustainable. He thinks a lot of these are going to be crashing in the future. In case you're wondering about that comparison made to 1999 and 2000, there's no one who argues today that that maybe was not a bubble. It certainly was. And like all bubbles of the past, a crash inevitably followed. The fact that that dot-com bubble burst doesn't mean that the internet is completely gone. Obviously, we still use the internet every single day. And a few of the most popular stocks from the dot-com bubble are really staples of our economy now, like Amazon, Microsoft, and Google. So it's important to understand that a current price bubble doesn't mean that a certain asset class is going away in the future. Investors need to realize that just because Bitcoin and a couple of the other more popular cryptos are starting to become understood as potentially being widely acceptable in economies in the future doesn't necessarily mean that the prices can't crash down at some point before then. But it can mean that recent price growth in these assets is just not sustainable, and also that the least established of them probably won't exist in the future, like Pets.com, for example, in 2000.
Pets.com will sell off the majority of its assets and lay off 255 of its 320 employees.
I read an article that ran a cool little hypothetical scenario just to illustrate how crazy some of the price action of these cryptocurrencies has been. They worked to determine how much money someone would have if they had invested each of the stimulus checks that were handed out in the United States over the past year into Dogecoin as of the day that those stimulus checks went out. In that scenario, $3,200 of total investment into Dogecoin would today give you about $300,000. And that's over a 90 times return in a short period of time, which is just crazy. Many people are seeking to understand exactly how the prices of these things have increased so drastically over the past handful of months, but I don't think they're gonna find any one good answer. Those stimulus checks I mentioned certainly help with this. People looking to make a quick buck certainly encourage this type of behavior in investing. Some people have even said that because of the pandemic over the past year, the vacuum that we've been living in terms of entertainment and media has forced people into like the YOLO game. While it can be tempting for people like me to sit here and call a market top in cryptocurrencies, we know from market history that these kinds of euphorias can last for much longer than we may anticipate. So will Dogecoin crash in the future? A lot of people say it certainly will. But it could be that the joke as an investment theory is here to stay. It could be a part of our investing culture with the current generation as they start to save for their actual financial plans and retirements. I think we'll see repeated cycles of booms and busts over different securities in the next decade. Either way, the only consistent way to build wealth is always going to be to remain the course with a fundamental investing strategy. Remain focused on what truly matters and enjoy some of this craziness from afar. This is not easy to do because it certainly can be difficult seeing people make so much money in such short periods of time. And if you can't fight this urge, go ahead and take a small percentage of your assets just to play in these cryptocurrencies, just like you would if you went to the casino on a Friday night. Because I've heard it said many, many times about 1999 and 2000 that the way people were making investing decisions back then is widely apparent in our market here today. People are talking about and trading cryptos very, very similarly to how they did with dot-com stocks in 99 and 2000. Those still went up for a long period of time, even once people recognized that it was a bubble. But then the bubble did inevitably crash afterwards in 2001 and 2002. Now, if you look at the price history of Bitcoin since its inception, it really almost by nature moves in this bubble-like behavior. It'll make these really huge runs way higher than it was previously, and it'll get really popular, be in the media, people talk about it all the time, and then it'll crash way back down like 50 or 70 or 90% of where it was, but it usually doesn't crash down to lower than where it started that run. So then it'll sit there for a year or two and then slowly start to run up and then again have a 1 year or 2 year period where it has this massive spike and then crash back down, but again, not crash lower than it was where it started that run. Certainly this price action is very different than what we're used to in traditional stock market investing, but when I use terms like joke as an investment and say that it could be a trend here to stay, that's the price action that I think could describe some of that investment thesis. So maybe you could agree that cryptos are certainly in a bubble, but they're going to be in another bubble in the future and another bubble in the future again. But if you're okay with that price fluctuation as these bubbles rise and burst, you could end up making more money than you put in later on. If you're someone who's looking to take a small portion of your assets to trade or gamble in cryptocurrencies, I think Webull is a good platform to do that on. If you haven't seen my links before, I have a referral code to Webull. You will get 2 free stocks if you sign up using my referral code, and that is in the description down below. You can deposit money into your account to buy cryptos on Webull and then also sell those 2 free stocks that you'll get to buy more cryptos with the proceeds. So this message is certainly not like Warren Buffett's, where he says that cryptocurrencies are all going away and they're not going to be a part of our economy in the future. I wouldn't agree with that. But if you just take some time and listen in the news and on YouTube to some of the most popular and intelligent talking heads who are crypto bulls, they're still starting to sound the alarms that the current price action, again, it's not sustainable. It would be sweet if it was sustainable, because we could all put our entire net worths in Dogecoin and we'd all be billionaires within like a couple years, but obviously that is just not going to happen. And that's why I'm encouraging people to take some time and consider the relative likelihood of success of their current cryptocurrency investment strategy. With the recent success of these cryptocurrencies and with the rising popularity of NFTs, I personally have an announcement to make, and that's that I signed a deal to start dabble in this kind of creator economy. I'm very excited to announce this new promotion. I've partnered up with Enron recently. They gave me a $50 million sponsorship on this video to promote our new joint product, which is crypto baby diapers. Poopy baby diapers are without a doubt the asset of the future. And if you have been following the recent trends in birth rates in the United States, you know that people are having babies less and less often. And so poopy baby diapers are going to start to become a thing of the past. That decreases the supply. The demand is about to go through the roof. So through my $50 million partnership with Enron for this video, we are using all empty Toys R Us old stores as our distribution network to unload millions and millions of poopy baby diapers onto our unsuspecting customers who are buying our NFTs in poopy baby diapers. I encourage you to drive down right now to your local closed down old Toys R Us department store and pick up yourself a carload full of my poopy baby diaper NFT coins. Thank you.